And here we go. Welcome, everyone. We are going to be looking tonight at market profile references, and I'm just going to be walking some of the newer people through market profile. And I'll start off by saying that the purpose of all my teaching is to show people what's going on behind the screens. And what actual levers are being pulled that power the machine. Being on the end where I was feeding market makers volume and order flow, um, you know, as Tom Sosnoff very, very intelligently says, we got to see how the sausage was made, you know, and thanks to some brilliant, brilliant men like Mr. Dalton, Mr. Jim Dalton, and Peter Resnicek, who I learned these concepts through, I decided to try and bring this to a bit of a more mainstream audience. And that's what we're trying to do tonight. And basically, market profile, what it does is it prints out your order flow in a way that the human eye can understand and grasp the concept, right? And in doing this, something very, very interesting happens. You take the concept of time and you add it to a chart. And you look to see how long price will trade for, what length of time it will trade for. And the longer it trades at a certain time, we call this value. Okay. And why is value important? Because value shows us where price is being accepted or where it's being rejected. Okay. And this gives you an edge. This gives you an edge because you can see details that the market structure gives you that no one else can. Okay. Very quick example of that is what we're experiencing right now. If we look at this overnight market, every single this period and this period, if you look at these two periods, this is called one-time framing. This is just a quick example. But I'll just go and show you from the beginning how to look at these charts. Now, I'm going to switch to a very clean chart that has no lines on it. So for all my friends who are the degenerate traders, I'm going to take your mind off Globex for a bit. Okay. This is a very simple chart of market profile. And the blue areas are the value areas. This is where price is traded for longer periods of time. Okay. Now, for people who are brand new to market profile, we'll look at today's trading. The profile is organized in a way that each letter period, or what they call a TPO, a time price opportunity, each TPO is a half an hour. So if you're a candle chart trader, candlestick, whatever type of chart you're using, the time frame for each period is a half hour. All right. A period is the open. the first half hour of the open. The open is designated in our charting software, which is called Sierra Chart. It is designated by this orange A. So that is the open. So you'll see me mark off charts like this, and I'll go and I'll change the color. And I'll just call this the open. It's kind of a strange thing here. Always does this for some reason. So there you have the open of today's period. Okay. The white letter here, also, this is what we call splitting a profile. So you can see each individual time framed period, each TPO. If you put the profile in its regular shape, you can determine where half of the range is. That is designated by this little little white A here. It happens to be in A period, but this is simply the top minus the bottom, that's half. So you'd go and you'd mark that off as half. Right? You change the color to white, and then you go to modify text. Tell me if this is helping you guys, because some people are very new to this, and that's what I want them to see. Okay. So there's half. Okay. Now, here is the day high and the day low. Right? And you can mark those off as well. You can mark the high in green if you want, and you can mark the low in red. Okay. Halfback is a dynamic reference. It changes as the profile elongates, exactly, as the day progresses. Right. So you'll often see me moving this up and down when I'm doing the webinars. Okay. I'm just going to move this aside for a quick second. This purple area right here, the purple letters, are what we call the point of control. Okay. This is where 70% of the time is spent, or if we're looking at volume, it is 70% of where the volume is spent. Now, I haven't put a volume profile on here, but if I do that, quickly we can see the volume that is traded at each of these levels. Okay. So the purple line is or the purple letters, I should say, is the TPO, the time point of control. The purple box here is the volume point of control. So you'll see that this is what we call the value area. Out of the day, out of all of this volume, 70% of the volume has traded in this area. And why do we look at that? Because we look at that to see where price is being accepted. Do you see how when we got down here, we only spent 1 half-hour period here, and not for very long either. And we only spent 3 TPOs down here under 2907 and a quarter. So price was quickly rejected here. When price came down, what happened? It was rejected back up. Now, what does that mean? Okay. It means that when the price got to a certain point, When it got lower, traders looked at that and said, that is a bargain, and I'm going to step in and buy. The example people use is you're giving away iPads or you're selling iPads for $50 as a, and then the price drops to 10. A bunch of people are going to rush in, stand in line, and buy those up. A little bit mindful. I'll get to that. Okay. So what happens is we're looking at value, and value tells us where price is being accepted. Okay. So each letter is a half-hour period. You've seen the open. You've seen half. We call this half back. This is also called here the point of control. Right? So I'll draw a line this way through here, and you color it purple. And you just label it like that. Okay. So these are the basic building blocks. Sorry, guys. Of a TPO chart. Okay. We have value area high. And value area low. And you can label those as well if you want. So this is a very, very quick, I'm showing you how to label your charts and set them up. Go to modify text. There you go. So these are the basic building blocks of a profile chart. Now you can see the charts are already kind of getting marked up. Okay. No, they're not. Okay. All right. Mindful brings up a point. Now, some people, like Mr. Dalton, will not look at volume at all. I find it important to look at both the volume value area and the time value area, right? I'm not going to get into why right now, but let's just say that they are both important. So when you go to the studies window and you click on profile period on the actual profile settings, it will say value area based on volume. So what I like to do is I like to have my letters or the actual TPO chart based on time. And you can see that it changed, right? So this is the time-based value area. The volume is still the same because it has to do with this part right here. So I'll get into that on another webinar, but for now, these are just basic references that we're going through. Okay. Now, why is this important? What's the big deal here? Okay. Let's take today as an example. Today was a great example of profile keeping us out of trouble. Okay. What we are doing today, the market opened up at 29.13 3/4, auctioned up and down, right? Our overnight inventory, sorry to squish this down. Here is the day before's close. Here's the close from the 8th. If you look at our charting, you can see the overnight. Most of the trading, I'd say 90% of the trading in the overnight, happened above the close of the previous regular trading hours session. So we say overnight inventory is long. Okay. Why is that important? Right? Inventory is a concept that very, very few people talk about in trading. Inventory tells us when people such as ourselves are trapped. You guys have all traded. Maybe some of you have never traded before, but you all know what happens when you buy and the price drops on you, right? You buy it and the price can't get any higher. You're trapped long. Some of us, when we're shorting, we sell short at bad trade location. We get caught short down low, and we sell and we get trapped short. So what the profile does is it tells us where inventory, which is us, where inventory is, and is it trapped or is it getting paid? Okay. So we take this example from today. Our overnight inventory was long from the previous day's close. We come in today, and I'm going to mark off the overnight half. Right? And then let's make this line a dotted line just to keep things interesting. So, and then we had the half from the previous day. And we had the point of control from the previous day. You still there, Ray?
Yes, sir.
All right, just checking. So we opened, we auctioned down, right? When we came down, look where we stopped in a period. We stopped 2 ticks underneath the point of control, which and also the halfway point of the previous day's trading. So what does this tell us? Right away, this tells us 2 things. Okay, it tells us who's in the market. It's not big traders selling big positions. If that was the case, we would have broke through this and continued downwards. We did not. We stopped 2 ticks and went back up. Okay, so that tells us that technical traders are in the market. And it also tells us that price, even in this A period, is being accepted in the upper part of the previous day's distribution. So this is a distribution, like a bell curve flipped on its side. So right away we know in the first half hour that it's a technical market. Then B period opens. Now, with our volume profile, it shows us where each period opens. So that is the open of the market, A in orange. But every period where it opens is marked in yellow. Okay. The square around each box is basically the half of each period. Now, I don't use that when I'm trading, and sometimes that will confuse people. And what do they call it on here, guys? It's the midpoint indicator or something? Where's Zero Suit when I need her? Ray should know this.
No, I don't know. I think she's on though.
Is she?
Yeah.
Great. Excuse me while I have a Dalton moment here.
Whoa, shots fired. Bang, bang.
No. It's okay.
No, I'm joking. I'm joking. Oh, she was on. She must have hopped off. Damn it, Zero.
Where is it here?
Mindful City.
Point in profile. Here it is. So you click no, and the little boxes are gone. Every time it's a running joke with profile guys about technology and Mr. Dalton. Hey, look, the guy's perfect in every other way. We got to bug him about something, okay?
Yeah.
So where'd it go? It came back. I guess I didn't. Did I not save it? Okay. So now you see where the open is on every period. So the B period opened, tried to auction down, could not even get to half back or the point of control. Okay. So that's telling us the sellers are running out of steam. Trades back to the upside. And we keep doing this. And what we're now doing, I got rid of the midpoint for the day too. I can't believe that. Something weird with the software. What we do is we look to see when this market opens in auctions. And today, for example, if you look at the replay of today, we went back and forth through the open a number of times. So that told me that there was indecision of the market. So the profile is telling me a lot of information. As the market opens, the market starts generating information. We say MGI all the time, market generated information, okay? And as it generates information, like trading back and forth through the open, that tells me that there's indecision in a market. It can't decide which way it wants to go if it goes back and forth through the open. Okay. So we had this up and down and up and down, and we came into the day, came down into the D area, and we had a poor low, which was just one tick of excess. And then upon completion, you can see that we had 1, 2, 3 ticks of what we call excess. And some of the people in the room bought this area or bought a little higher once we got over the half and over the point of control, because they saw this excess as the down move being completed. Now that's something you'll never see on any other kind of chart, right? When you see excess on a low, it might not be great excess. We only had 3 ticks. It's not 5 or 6 or 7, but you can tell that the auction to the downside for the moment is over. How else can you tell that? Well, we can look at the excess. That's the main thing. Okay. Then we see the volume sort of petering out a little bit. Now, this isn't the best example of what we call a taper, but a taper in volume is when volume decreases quite a bit as it gets lower, which means the sellers are running out of things to sell. And in this case, it's ES contracts. So we have 1,300, 700, 226. There's a bit of an anomaly, but then you have 46 contracts at the low. So there's only 46 people in the entire world at that time that sold ES at this level. So now we know that the selling is done for now and the auction is back up to the upside. So how do we take a trade like that? We'll look for price to be accepted over half back and over the point of control once this low has been put in. All right. It's easier said in hindsight after the profile is done because none of this exists when we're watching this. So if you take a trade, say here, your stop's going to be just a tick or two below here, right? On a micro contract, maybe it's a 5 or 6 tick stop, right? And our trade was to the upside. Now, profile is going to tell us where to put what should we expect for a win. Okay, say we're long at 28.08 and 3/4 or 28.08 and a half. Okay, say we've taken a position here, just for example, right? So we're long 28.08 half. Where should we expect this trade to take us? Okay, this trade, we should expect it to take us somewhere near the open. Sure enough, we went higher, but based on the expectations of the day with this back and forth motion and the way the market was trading, a smart person would have gotten out before the open. We didn't, mindful that it wasn't there at the time, value area low, right? We were only 3 or 4 periods in. Okay, it's developing. So you don't want to, right? It's a good question. Don't worry about that. That's fine. But we are looking at value, right, from the previous day. So it actually brings up a good point. This is our value area low high from the day before. Okay. And so had you gotten long here, your first resistance would be at this value area low. High, sorry. Okay, this would be your first target and your second target would be here. Yes. Yes, Debo, it depends on the range, of course, of the session, but yes, the value of the session develops as each half-hour period goes by. So because we look at the previous day's references, right? Get this out of the way for a second. Because we look at the previous day's references, this would have been value area high from the previous day. And that, as Mindful pointed out, if we were long here, our exit should be somewhere around here. Because on a technical day, right, so say this is our buy, and this is our sell. Okay. There is, yes, we do. And you were in the room, so you saw it today, right? Remember? Like you were watching the open with us, right? It's not as important, but definitely value area high from the previous day. You saw the resistance, okay? So here's your structural entry, and it's based on the fact that we had excess, and there's your structural exit. And your stop, you could have put your stop anywhere in here, because that trade should have worked quickly. Okay. So these are the references and how we trade and use profile to do so. Okay. The profile will tell us the strength of the buying, the strength of the selling. It'll tell us where the selling is drying out, that sort of thing. Does anybody have any questions about what I just covered? Yes, it does matter, right? The previous day high matters, definitely, right? It was right here, right? You saw what happened when we got up here in H period. You were with us most of the day, weren't you, Mindful? And you saw how the H period came one tick to the previous day high. Okay. So here's another good point. Okay. There is something called front running. And what is front running? Front running occurs when traders know a very visual reference like the previous day high is coming, and they will step in and automatically start shorting that reference. When they do that, sometimes price will not reach that reference to the tick. So in H period, you could see that they stepped in and they front ran the previous day high. So that is a great indication to take a short trade. So had you taken a short somewhere in this area, your stop would have been somewhere here. A few ticks. Hang on a second. If you take a trade with respect to no. Jay Smith, you're looking at the previous day. Those references don't move. Do you understand that? This is the previous day's value. Let me get rid of this here. Okay. Here is value area high from the previous day, right? So for example, if we're taking this is a static reference. It's not going to move. It's the day before, right? So you take a short before it, as you can see that there's front running, your stop, this blue line is your stop. You don't have to waste a lot of money, right? Because you see front running. Now, if they jam it through, right, and that can happen, it can front run, stop, go down a few ticks, and then jam through. I've seen that happen. The odds of it happening are not as high as selling. So here's your stop. And this is how I save you money, because when you see this is like somebody banging you over the head and saying, look, the buying isn't that strong. The buying wasn't strong enough to get up to the previous day high. The sellers, and these are not long time frame sellers, okay? These aren't guys selling 1 million or 2 million shares of Microsoft, okay? These are short-term sellers. They step in and they front ran that very, very visual reference. As soon as you see that, you take a short position, you put the short on, as Mr. Dalton says. You put in your stop a few ticks lower. Now, where's your target? The POC's not there at the time. Okay, this doesn't exist at the time. Okay, you're going on yesterday's references. Right? Yeah, but that's a great target, Mindful, in a perfect world, but we didn't get down there, did we? Right? So what you do is you look at the spike. Okay? Because, right, because when you go through here, sorry, Mindful, I'm just going to delete this stuff so it doesn't confuse people. Okay, that could be a target as well. But based on this, we were looking to see, right? What is a target that is attainable? Let me ask you that, right? Because say you're short at 29.23, the open's down at 29.14. You're looking for a 10 handle trade, right? You're looking for a 10-point trade. That doesn't make sense given the day, right? So what you're looking for is something that's attainable, right? What you want to do is you want to look at the base of the spike. This is your target, right? Because this, now I'm getting off topic, but this is a spike or price exploration from the previous day. So what we're doing, how you see trapped traders? Well, they're trapped right here. Okay, had you gone long in H period, okay, and you were looking, because a lot of people in the room were saying, I'm going to buy H period, and it's going to go up to the overnight high, right? So you buy it, and you get up here. Now you're trapped. You can't even break the previous day high. Does that make sense, Ferb? Ferb? This tiny little thing tells us a lot, right? This tells us so much, and it's something that a lot of people don't see. It tells us that the buying ran out of strength and that the sellers stepped in and sold before we could even hit this target. So you know that we are testing this area, like I was talking about all morning. This is a profile reference called a spike. In the day prior, we broke out of the day and ran all the way up here to 29.24 3/4. So the rest of the day in the morning, right? For the rest of the day in the, all morning, what did I say? I said, are we going to find acceptance in this area? Because we probed into this area the day before. So now is profile, the concept of time, right? Profile will tell us whether we have acceptance in this area. So now the first couple of times that we got into it, we went in, back out, went in, back out, went in, back out. Then we finally caught some steam and cleaned out all these sellers or this overhang, and we blasted right through here. Okay, so here is your short, say right here. Here is your stop, and here is your target. There's nothing wrong with that. 23 to 19, 18, that is a decent trade for a new account. Okay. So this is how we can see and use profile references to trade with, because they tell us so much, right? At first, it's a little fuzzy, right? At first, your brain is taking in a lot of stuff at the same time. So you got to kind of be a little kind on yourself. You have to be a little easy on yourself, okay? A lot of you guys, especially ones who are new to this in the last couple of weeks or even heck in the last couple of days, right? This is a lot of information to take in, right? But if you kind of just sort of make it really simple, where's price being accepted? Where's price being rejected, right? I won't be reviewing tonight's trade, Pyro, right? On this webinar, I can talk to you about it privately, but I don't want to confuse everybody, all right? So yes, they are, KP, definitely, definitely they are. Overnight half back, is a level that we looked at, right? We'll look at overnight inventory, right? And then, of course, the overnight high. If you look at the overnight high yesterday, you can see that we had this was price exploration in Globex, okay? Which is not really the same thing as when the S&P 500 is open and the market's open. Look how thin this is. You can tell by the profile, this was a complete reactionary move, and they just bullied the price up. And some poor sucker bought 2 contracts right at the high here. But you can tell, like, we didn't get nearly anywhere near the overnight high in today's trading, right? And if you look at the replay of the day that we did today, we definitely used we looked at the overnight references, and it was mostly the overnight halfback. Okay. So these sorts of things and what the profile tells us is how much time are we spending at this price? Okay. And that's why we look at the point of control. So now if we look at the day-to-day and look what happened, you can see a couple of things. You can see that the value from today today's value was overlapping. You see it's overlapping to higher. Not much, but it was higher. Okay. And then you saw that we had a good amount of acceptance in that price spike from 17 3/4 up to 24 3/4. There was a good amount of time spent up here. So price did get accepted at these higher levels. Okay, then of course the overnight we have this crazy kooky nonsense down here. But for the most part, prices were accepted at higher levels overnight. I mean in the RTH, today's session. Okay. Now I'm going to briefly go and look at the overnight because I know you guys are dying to. And we'll see. This will explain the concept of one-time framing. Okay. One-time framing is something that is very, very unusual to a lot of people. Here's the definition of it. Okay. It's a trend situation in where in an uptrend, the low of the previous TPO is not broken by 2 ticks or more. So you can see the low of T does not come anywhere close to S, and the low of U comes nowhere close to T. So when I say we are one-time framing up, this tells us don't short. Okay, and we did that today very, very clearly. Ever since the D low, we one-time framed up. You see F, G, and H? A lot of people got trapped short here. But when I saw that G could not take out H by 2 ticks, all you need is 2 ticks. It's right here. Just had to get down to there. They couldn't do it. Couldn't do it in G, couldn't do it in H, right? So as the church lady says, not going to short, wouldn't be prudent, right? This is one-time framing. One-time framing up. Okay? You cannot get any more clear than this to tell you that the long trade is the trade today. Shorting this was very frustrating for a lot of people. Yeah, in a very technical market like this, Debo, where it was very mechanical, I definitely would have put I would have gone 3 ticks, right? On the micro, it's an extra $1.25, right? It's a Snickers bar, right? So let's be a big spender and use a 3-tick stop. That's unheard of in futures trading, right? You futures traders, they use an 8-tick, 12-tick stop. They don't use 3 ticks. They'd think I'm a nut. But in these cases, it works very, very nicely, right? And this is another thing that Profile will tell us that in other charting software won't. It will show us that the concept of one-time framing means don't get short the market. Does anybody have any questions? This is a very, very basic sort of webinar for people who are just starting to look at Profile. I'm showing them what the value area is, what a TPO is, what excess is, right? Jay Smith, M told me not to do anything because it's the last half-hour period of the day and I don't like to trade the last half hour unless I have to, right? And it looks very, very clear as a table pounding short after the fact, but during that time, we didn't know what was happening and we were one-time framing up until M broke. So for new traders, this M period is the last half-hour period of the day, which I do not recommend you trading. Now, there are people in this room who have been either trading for some time and are used to volatility, or they can't help themselves and they will trade the last half hour because they can't sit on their hands, right? And that's cool, right? That it's not for me to say that. That's their money. I didn't make their money and I don't found their account, right? 5 to 6 p.m. I don't know. I never said that. So mindful, I've never said it's not recommended to trade 5 or 6 p.m. I had 2 nice longs off the open in Globex, so, but that's 4 p.m. my time. So um, that M high, uh, it did not come anywhere close to the overnight high, but I would not have traded that period. I had my trades in and I was done. And that's the one thing about trading that a lot of new traders don't understand. You don't have to trade every period of the day. You don't have to trade all the way up to the close. You make your money, you put it in the bank, and then you take your hand off the mouse and you watch the rest of the day, right? There are people who say, you're on a run, press it, that sort of thing. That's for people who've been trading for 10 years and have consistency. When you are not a consistently profitable trader, do not press your luck, right? I know I sound like an angry old man, but it is the most stupid thing I have ever heard for people telling new traders to press their luck and their profits are house money. It's not house money. You're not in Vegas. This is a business, right? Example, if you were selling peanut butter and jelly sandwiches in a store and you sold 30 of them before lunch, would you take that money and throw it out into the street? No, you wouldn't, because that's not a smart business thing, a decision, right? So trading is a business, right? We treat it as a business. The profits we make are profits from doing business. So we like to squirrel those away, right? When you're a new trader, and if you are a new trader and you have 2 or 3 successful trades in a row, stop trading. Because what that does is that gives your ego a little bit of a chance to reset, okay? And then you can watch the profile as it develops and you'll get a feel for price action, right? Mindful, I don't know what you're talking about. I've never heard the 5 to 6 period as, are you talking about the maintenance period between the regular and the Globex? I'm just kind of confused. L had, yeah, you know, it's okay. I wouldn't look at it that way. When I was watching L.J. Smith, I was looking at one-time framing up. I was not thinking of shorting the market at all. In fact, I was thinking of a price probe to the overnight high. Right? So it, you know, that is not, that did not go through my head at all. Right? M period, okay, let me explain something to you guys, okay, because none of you have sat on a trade desk. M period is the last period of the day when inventories get adjusted, when market makers take their positions that they've been working for a client and they move it from their inventory to their client account. There's a lot of bookkeeping that happens that you guys don't understand in the last half hour. If you were on voice with me in the last half hour, you'll hear as soon as M period starts, I have my watch programmed now for the last 20 years. It will beep 1 minute before M period starts. And that reminds me to go clean up my positions for the day, right? If I've been working a 1,000,000 share sell order, I'll clear that off and I'll print that order from my market maker inventory to the client account. That's why I don't trade the M period, right? People will trade risky times of the day because they have absolutely no idea what is going on behind the scenes. I'm trying to tell you guys why these price fluctuations happen. I can't tell you why it sold off that way, but I can tell you it sold off because the people who were long in M were not getting paid at the top of M. So they started to sell. Also, an algorithm came in because of some news thing and showed size. And when they showed size, bids disappear, right? Okay, there is a saying, when you show them size on the bid at the end of the day, bids come off like a prom dress. Okay, people will just not want to buy. And because we have machines in there now, right? Right? When they pulled the bids, that's why I told you to trail your stop, right? When you are in tricky market conditions, right? And I was telling you guys, at the end of the day, right? Trail your stop up, right? If you're long at 24 and this thing's up at 29, have your stop at 27, right? Don't be afraid to be greedy when you and take profits, because you're not going to lose money taking profits, right? The slippage will cost you. I don't know where you were trading and how that got hit out, but you have to be careful in M period. Please, please, please be careful in M period, right? There are people. What is the actual start time? It is 3:30 Eastern time. It's 3:30 to 4. Okay. I know it's exciting. I know it brings out, the sitting in front of the one-armed bandit thing. You can hear those clinking machines in Vegas, right? It gets you going, it gets you excited, it gets you whipped up. But newer traders, for the love of God, please do not trade the last half hour of the market, right? If you haven't made your money and you need to make it in the last half hour, you're done for the day, right? That is when a lot of monkey business takes place, right? And that's where positions get moved around, rebalancing happens. I don't know what you're talking about. Oh, okay, you're talking about the overnight. R period. Okay, anyway, sorry. So what I'm telling you is don't trade M, right? You will see people in this education room. You will see them, saying I'm long, I'm short. Don't get sucked into it. Okay? Do not trade the last half hour of the day. If you are new to market profile, if you're new to this, right? Especially if you've had a good day and you've had a couple of good wins, that M period will take you out to the woodshed and give you the beating of your life sometimes. I've seen it happen hundreds of times, right? When the market trades back and forth through the open in A period, it tells me there's no decision. It's indecisive, right? I was thinking of getting long off the open when I saw this kind of movement. Then it kept going back and forth, back and forth, back and forth. And I told you guys, I was like, I don't know, I'll wait, right? Because I got tempted, right? And then when it was trading back and forth through the open, remember this morning, what did I say? I'm really, really short biased. I'm really short biased, right? I kept repeating that. And that kept me from getting short in the hole, right? I kept telling you guys, I'm short biased, I'm short biased, I'm short biased, right? This is turning into a trading seminar. It's a market profile seminar. But does everyone sort of see what I'm talking about on how profile can be used? Does anybody have any questions about any of these references? About the half-hour period, about how things are marked off, anything like that? Did you guys find this helpful or was I off topic? Let me know. This is the first one I've done. I want to do a number of these. Aha. Great question, Jay Smith. They're both important, right? They're both important. Today, the volume value area from yesterday was beautifully important because we kept dipping our toe into the volume value area and bouncing out. We kept going in and out and in and out, right? And you could say the same thing about time as well, right? If you look at the time value area, we kept dipping our toe in, dipping our toe out. I like to use volume. There's no higher weightage. Okay, this is how I look at these references. Okay, no T2, no T2 today. Right, that's got to be in the room, and I'll explain it later. But what we're looking for, the most important thing, guys, it's not the references and which one's more important. Okay, and once you get that out of your head, you're going to be free. And here's how you free yourself from this. You look at how price behaves around a reference. That's why when you look at my charts, they are marked up like crazy. You see all this nonsense? Right? Because what I will do is I will look and see how price behaves once we get to a reference. For example, this 82 3/4, and please don't ask me, well, how I came to this. I will show you in time. When the market sold off, I wanted to see how price reacted, right? And when market sold off in our period and we hit it to the tick, I took a long, just a little bit above, and we bounced right off of it. You guys looking at this, all right? You see
Wow.
what happens
Yep.
when the market gets too short? This is why you don't short one-time framing, because you get your, your took us handed to you, right? Now we are back in the previous day's range, right? God, that was a beautiful trade. Look at that. Leaping lizards. All right. This is why all these degenerates who are getting short down in here were trapped, right? I knew you guys couldn't be on this webinar and not trade. Nice trade, degenerate. Don't worry. I'll never fault you for making money. I know you guys can't help yourselves. But this is why you do not short a one-time framing up market. Because in Globex, you will have your you-know-what, your took-us handed to you, right? Right? You just saw, where's Andy? Andy's probably just like listening and just trading. Like he's probably traded 300 times already. Either that or he's got a gig. Andy's our resident musician. But you can see how my thing is, look, here's the previous day low. How are we behaving at the previous day low? All right, guys. Do you guys have any other questions before I let you go? If this was helpful, let me know. If you want me to change something, this is my first one. Okay, I will get better at this. Oh, I will go into that mindful tomorrow on the pullback low. Okay, I can do one of these every night if you guys want. It doesn't matter. I don't mind. Because the more I do this, the more I reinforce it into my lizard brain too. Leap and lizard. Somebody picked up 340 contracts down at 28.85. Oh, oh, good for them. And we're back in today's range. Just beautiful. So this is how market profile can help you. It can help you from getting short down here. All right, guys. Thank you so much for being on here. I really appreciate you taking time out of your evening. Let me know if it was helpful. Give me suggestions. I already got suggestions when I was talking. Thank you, Davis and Debo. Have a great night, everyone. Thank you so much. See you in the morning.